Welcome to our channel Forex Tips Gainer. We also represent a website www.fxtipsgainer.com.
Then let's start today's topic. Maybe some words about my person. I'm Matthias Denecke, the education manager at Trademo, and I'm also responsible for the 100K real money trading account. And today's topic is 7 rules of successful trading. And as you already can see here on the left-hand side, I don't have a lot of charts today because this is more a mindset, more a webinar about rules and principles. But I think, in my opinion, it is very important to know about these rules and principles in general. Okay, let's start. So on today's agenda, I have 7 basic rules for you, and then additionally 7 principles. But let's start with the 7 basic rules. We have 7 rules. The first one is specialize in a specific market. The second one is get ready or be prepared for your trades. The third one is keep track, be informed, an overview about all the markets. Then the fourth point is trade only one market and keep no more than 2 trades simultaneously. The fifth point is stick to your strategy rules, and this is the most important in my opinion. The sixth is pay attention for a good money management, so be more conservative. Conservative is much better than too risky, because then of course you risk your money and you need the money to make some trades. And the 7th aspect here is the market is always right. There is no question about it. The market is always right. And now of course I will say some words about all these specific 7 basic rules, and you can ask me at any time any questions, and after each slide of the PowerPoint presentation here I will check the chat box. Okay, what does it mean to be specialized or specialization? With this I mean focus on just one market, for example currencies, or maybe you are interested in stocks or commodities. So keep the focus on this particular market. Don't trade stocks and currencies or stocks and commodities at the same time, because each market has its own characteristics. And it is much, much better to focus on just one market at the beginning. Of course, later on, if you're more advanced and experienced, then you can be more focused on several markets, let's say stocks and commodities, and maybe bonds, for example, and options. Yeah, that depends on you, on your skill level. But at the beginning, the clear recommendation is just focus on one market, currencies, for example, or stocks. And it is also mean that specialization, that you will be able to focus on that, then you can understand the market more intensively, and you will find leaks and good spots. You improve your trading in this specific market, and all this helps you a lot to become a successful trader. And of course, not every market is suitable for everyone. For example, some markets in the commodity markets, futures markets, maybe have some specific opening hours. And if you are a working people, then you don't have the time to trade, let's say, sugar in the morning hours, because then you have to work and then you cannot trade this specific market. Yeah, this is just an example. Another one could be trading news in the futures markets with bonds. Then of course you need to have the time at these special events, and if you don't have the time, then you cannot trade it. And this is also mean that you need to specialize on the market that is suitable for you. And of course, specialization also means that you have to focus on a specific time frame. So if you are a full-time employee, then you cannot trade day trading and make trades on a minute chart, because you have to work during the day and you can only trade in the evening sessions. And for this reason, you can maybe only trade bigger time frames on an hourly chart, daily chart, maybe even a weekly chart. And this is a kind of requirement that you cannot trade all the time frames. And of course, try to use only one concrete strategy at the beginning. Yeah. Don't be distracted by a lot of strategies are available out there. Pick one, and this is your strategy. And if you want to have another one, then your focus is not clear enough. And this is the reason why I recommend focus on just one concrete strategy at the beginning. Then we come to the second point of the basic rules, the preparation. So what is mean by preparation is that you need to have, you need to know that a market, for example, a stock market, has a specific event at the moment. So for example, for the currency market, there are especially ECB, for example, European Central Bank, or the Fed, the Federal Reserve in the US. They have regular events, and you have to pay attention to these events, because these events have a deep impact maybe for your positions. And you need to know when these regular sessions, of course, you can only know the regular sessions and not the irregular sessions. You need to know when these sessions and events are. And consider whether these events affect your positions and, of course, the time frame. Okay, then let's switch to the chat box. Maybe you already have some questions. Hola, all good. Okay, so I don't see any questions, but maybe you have some right now. Then start typing and I will observe you, but it doesn't look like. Okay, then I can continue with my slides here. So, yeah, the third basic rule is it is good to have an overview. And with an overview, I mean keep track of markets that affect your trades. If you trade commodities like grains, wheat, oats, and so on, soybean oil, soybean meal, all these kinds of grains, for example, then you need to pay attention to the weather. Or if you a stock trader and a lot of your positions are in the financial sector, especially in the insurance sector, then you have to pay attention to natural catastrophes or disasters, because these events have a huge impact on your trading positions. Or maybe you are trading bonds and interest rate, or maybe some of the most important indices on the world, then you, of course, need to pay attention to political situations. And if you are a stock trader and you have some specific positions in the market, then you have to pay attention to the earnings season. So in the US, you have quarterly figures. And if you trade, for example, let's say Chevron, it's an oil company, then you need to pay attention to all similar companies, for example, ExxonMobil. Even your position don't have a specific event in a specific period of time, then of course you also need to know when similar companies have regular events, because the events, the companies are so similar to your company that the move is in most cases the same. For example, if ExxonMobil goes through the roof, yeah, goes up a lot, then I would say 99%, then Chevron is doing the same. So there's a very, very high correlation. And if you have a very high correlation, then of course you need to observe all the similar markets as well. And the fourth point is the focus. And it's pretty close to the correlation I already mentioned. So the focus should be on just one market, for example, currencies or stocks or commodities. Yeah. And if you have this focus, then it is good. Yeah. This is the first point I would say. But the second point is that you should not trade more than 2 positions simultaneously. Because at the beginning, and this is addressed to beginners, and at the beginning, you can lose your focus very easily. And for this reason, I recommend you to trade maximum of 2 positions simultaneously. So if you have, let's say, a nice spot in euro dollar and you see another nice spot in British pound US dollar, then maybe you can trade it because these are only 2 positions, but you need to watch out for correlation. And the correlation is very high between euro dollar and Great Britain pound dollar. And this is then, of course, not a good idea to trade 2 positions with a very, very high correlation between them, between each other. And then, of course, you should avoid to trade these 2 positions, or you only take the half of the position size. Then the risk is already the same. Okay, any questions so far? Let me check the chat box once more. No questions so far. Okay, then I will continue. But you can hear me, or is there any problem or any issue with the sound? So please, okay, you can hear me, I guess. So the voice is clear. Thank you for your feedback. Then I can continue here with my last 3 basic rules for your successful trading. And this is, as I already mentioned at the beginning of the webinar, the most important rule in my eyes is to have clear strategy rules. Write your rules down for your entry and for your exit, so that you don't have any room or space for interpretation. If you write down your rules in a straight and clear way, and you give it to another guy, and the guy can do with these rules exactly the same as you would do, then it is perfect. So there should be no room for interpretation. So if you say, for example, if the price breaks through the moving average 50, and at the same time the moving average is rising, then this is my entry. Yeah, of course, it's just a hypothetical example, but you know what I mean. Yeah, it needs to be very clear, and then it's perfect. Yeah, this is what I mean with strategy rules. And of course, the same is valid for your exit rules and maybe for your management rules. Sometimes you have to adjust your position, then it's a rule. Write it down clear, and then it is perfect. Okay, then we had this topic a lot in the past. So the money management, and my tip to you, or my recommendation to you, is stay 100% in your money management. So don't be more risky at a funny day, or maybe you have a happy day, everything is good, and you say, okay, today I want to risk much more because then I can earn more. No, don't do that, because you risk more, and this is always bad for your account. Yeah, keep going with your money management and don't be vague, or don't make crazy things with your money management. Yeah. Okay, then the 7th and last point of the basic rules is the market is right. There is no questions about it. And it is a very bad suggestion or idea to think maybe I wait a little bit longer than I become right or not. So stick to your rules. And if the market makes something different from what you have expected, then it's okay. Yeah, you can close the trade, and then that's it. It's not a big deal. So don't trade against the market, and don't try to have the longer breath to finally be right. Yeah, because the market always have the longer breath, I would say. Okay, then let me just check the chat box once more, because I don't want to miss a question from you. Okay, here's one. If market is right, how we can stay 100% with money management? If the market is right, let's say you are long in euro dollar and the market is moving down, then you have usually, or you should have, a stop loss. And the stop loss is triggered, and then you are out of the position. Yeah, you are flat. You don't have any open position there. Yeah, and then the market can go down and can fall to zero. Doesn't matter, because you are not anymore committed to the market, committed to your position, because then you are out. Hopefully this answers your questions. Let me check another one. Will you recap the overall session? I missed out on the first 5 slides. Unfortunately not, but the good news for you is that this session here is recorded and is available, I would say, tomorrow, latest on Thursday. And of course, we send out newsletter with a link to the right video. And you can check all the recent and all the webinars from the past for free webinars. I'm only talking about free webinars because we have some paid webinars for our premium members as well. You can check all the free webinars on Tradimo on YouTube, and then look for Tradimo, and there you can find a lot of webinars we had in the past, just for your information. Okay, then I would say let's continue with the 7 principles of trading to become a successful trader. Just one question here I can check right now. If I understand, we should stick with our risk money management partners. Absolutely right. Yeah, this is what I meant. Sorry for confusing you, but this is 100% right. Okay, perfect. Okay, 7 principles of trading. The first one is consequence and self-discipline. Second, self-criticism and personal responsibility. The third one is available time without distraction. Fourth, every trade counts for itself. And you can add here some attention marks behind, because this is very, very important. And most of even advanced traders forget about this, but this is very, very important. The 5th point is false trades are closed immediately. I know a lot of you and a lot of other traders don't do that, but this needs to be done. And the 6th point is any intraday trade is closed at evening, because otherwise it's not longer an intraday trade, because you then hold the position overnight. And the 7th point is for third parties, I do not act. Yeah. Okay, let's dive a little bit deeper into these 7 principles. What I mean with consequence and self-discipline is be consistent in implementing or adjusting your trading rules. Yeah, maybe someday you have the idea, okay, today I make something different. If you do so, then you should write it down into new rules or replace the old rules with the new ones. Yeah, you cannot do something different just from the stomach. Yeah, just because you think, okay, my gut said me I do it different today because today is Wednesday and it is sunny outside. I think you know what I mean. Be consistent with your strategy, with your trading rules, and if you change something, then it should be written down in new rules as well. Yeah, stick to your money management is also part of consequence and self-discipline. Okay, then the second point, the second principle here is self-criticism and self-responsibility. And maybe you have already experienced such example. For example, you make a mistake in trading. and for example, you want to go long in euro dollar, and you misclicked and you click on sell. You short euro dollar. And then maybe out of this mistake leads to a winning trade and you make money with it. This is good. Maybe you think this is good, but it isn't good because this was a mistake. And it's much better and maybe hard to understand to make a correct trade without any mistake, and this trade leads to a losing trade. It's not the best thing to have, but of course, you made everything correct, and this is a good trade. Even the result is bad. And of course, it is also very, very good, and I can recommend this. Search for bugs, maybe this is not bugs, for mistakes, problems, and leaks, and improve these leaks. For example, you can do this with backtesting, or maybe you already have a trading journal where you write down all your single trades. So yesterday at 7 p.m., I went short in euro dollar, my entry was there, my position size was that, and the result was X. Yeah, and then of course, if you have a lot of these trades, let's say 70 trades or 100 trades, then maybe you can see, okay, all huge trades, all huge winners, I started after 4 p.m. and all losing trades I started, or all losing trades I made, I started before 1 p.m. Yeah, and then maybe you see a kind of pattern, and then you can avoid the bad trades and be more focused on the good trades. So for this, it is very, very important to have a trading journal. And I prefer to do it with the own trading journal. I don't use any external software or use the trading journal from the broker. I write my own trading journal. And this is also a kind of homework or exercise. And I can recommend this 100%. Okay, then I will check the chat box once more. Okay, there's no comment. I can continue with the 7 principles of become a successful trader. And this is available time is one important principle. Your available time often determines the market and the time frame. For example, if you are full working employee, then you have only time at the evening time, and this determines you in terms of trading only on the daily time frame or maybe the weekly time frame. Yeah, hopefully you understand what I mean. Working people cannot do day trading, in other words. And traders with little money can rarely trade very high time frames. And what I mean by that is, for example, imagine or assume that you have only 400 bucks and you want to trade stocks on a daily chart. And your stop loss is, let's say, $10 away from the entry. Then your $10 for just one share of the stock is $10 and you only have 400 bucks. $10 out of 400, you can calculate that very simple, is 2.5%. And if your money management say you can only risk 2% in a trade, then you cannot do the trade because the time frame in this case is too high, or in other words, the stop loss is too far away to make this trade. And if you trade only very tiny time frames, minute charts, hourly charts, then of course the stop loss becomes much closer to the entry level, and this opens you much more opportunities. Okay, then the thing I think I said this is the most important principle and not stick to your trading rules. But this is, of course, another very important one. Each trade counts individually. Because I have experienced in the past that a lot of beginners say something like, okay, now I have a winning streak, a winning strike, or streak, winning season, a lucky period, however you want to call it. And I made 7 winning trades in a row. Wow. Okay. I cannot do anything wrong. My next trade, I will risk much more because I cannot lose. And then they increase the risk, and then the catastrophe begin. So don't do this mistake to say, okay, the recent trades running good, so my next trade will be the same. So each trade counts individually, counts for itself. Yeah. If you make 10 trades in a row as a winning trade, then the probability of a successful 11th trade is 50-50. Yeah. There's no question about it. Every single trade has its own probability of success. Okay, then I will check the chat box once more. But I don't see anything. Then I can continue. And yeah, these are the 3 last principles of becoming a successful trader. And this is maybe the most challenging principles in trading. I can tell you, close false trades immediately. And this is especially very, very hard to do if a mistaken trade is running good. Yeah, for example, as I said a few minutes ago, you want to go long in euro dollar, but you misclicked and you sell euro dollar and you are short in euro dollar, and the trade is running good, and then you should close the trade immediately. Even the trade is running good, because it's a mistake. And you cannot say, okay, I will do all my money in the future by doing accidents and misclicks and so on. You need to have trades that you can duplicate. And a trade which is based on a mistake, you cannot duplicate. Yeah, this is the sense behind the close false trades immediately. And of course, this is also valid and maybe even more valid for trades that not running good. For example, you have made a mistake and the trade is running bad, and then the worst thing that can happen is that you say to yourself, okay, I hope, and remember, don't forget that hope is a beggar. And then you hope the trade is maybe returning to break even or is becoming a winning trade in the end. Don't hope, close the trade. Yeah, this is a clear recommendation to you. Don't hope, close the trade if you have made a mistake. Yeah, and errors can be, of course, you misclick, you sell instead of buy, or you buy instead of sell. Maybe you pick the wrong ticker symbol, and the underlying is the wrong one, or you made a mistake with the position size. Of course, if you make a position size mistake, then you can edit your position. Yeah, you can make bigger or you can make it smaller. Then, of course, you don't have to close the position. You can adjust the position size, but it's also a kind of error or mistake. Okay, then the next one is close intraday trades in the evening. Otherwise, it's not an intraday trade. Then you hold a position overnight. Then it's not an intraday trade. Very clear, very simple. I think it's not necessary to explain it in more detail. And then the last one, maybe it's not the most important or a very important principle, but it's a kind of recommendation. So if you don't feel confident and you don't have a lot of you don't have a track record of 5 years of success, then don't trade other people's money or give any tips or suggestions to anything to anybody else. Yeah, don't do that. It's not a good thing, and I think this recommendation will help you a lot to being friends with each other. Yeah? In Germany, we have a phrase. This is called like money stops friendships. Yeah, and maybe this is a good thing. I don't know if this is existing in the English one. And in general, I apologize for my bad English. I'm not a native speaker, and I don't learn English in the school, so it's just learned by living. Okay, anything else? Any questions regarding this 4 basic rules, or this 7 basic rules, of course, and 7 principles? Do you have any questions regarding this?